Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be talking about how I recovered from a big loss in my options account, and this account is now up over 22% in the last month alone. So I'm super excited to share that with you guys today. So right now we're just in my spreadsheet here that I use to keep track of my options. And if you don't recall from my past video, the first trade I did on Rocket that got me in some big trouble was a cash secured put that I sold back in April, at the very end of April, and it was for the $21 strike price, and it expired on May 7th. And this actually basically went over earnings, so they didn't have the best earnings, and the stock dropped a bunch, and I was assigned at $21 per share. And I received $35 of premium for this, so technically my cost basis was a little bit lower than $21 per share because I was able to receive that premium. And then basically what happened is that stock dropped to around $16 or $17 a share, so I was down about 20 or 25% on those shares, which was pretty scary. And since this was a decent chunk of my account, it really dragged my account down. And then what I did after that is, since I already owned 100 shares, what I did is I sold a covered call on Rocket at the $21 strike price, which is the same one that I bought the shares at. And I only received $20 of premium for that since it was so far away from that strike price. And then basically what happened, this was set to expire on June 11th, which was just this past Friday. And what happened is I decided to buy that contract back on Friday for $2 per share. And the only reason it was $2 per share is because it was set to expire that day, but Rocket was still, around $20.50, so it had recovered a fair bit. So it was around $20.50. There was still a little bit of a chance that it could have jumped up to 21 right at the end of the day and got a sign there. But what I wanted to do is, since Rocket had been going up, I knew I could sell another call a little bit further out in time and get some good premium for that. And that one I could sell closer to the money, which would mean I would get more premium as well. So I bought that back for just $2, and because of that, basically on this trade, I got a little bit less than 1% profit for, a little bit less than a month, which is not too bad. But the good thing is I was also able to sell another trade, a call that day for the June 25th expiration, which is only 2 weeks away, and I sold that at the $22 strike price, which is $1 above where I got assigned, and I received $52 for that, which was pretty nice. And we're going to look a little bit more in depth at my Rocket position in a second, but I also want to share this trade I did with on AT&T on June 3rd for the July 9th expiration, a cash secured put at the $28 strike price, and I got $36 of premium for that. That position is currently up around 40%, so I might take that off if it goes to 50 or 60% in the next few days, but we'll just see how that shakes out. So this is kind of just a little thing I put together to evaluate my individual trades on this position and compile them together. So originally I sold this first put right here, like I said, and I received $35 of premium for that. And then I ended up buying the shares at $21 per share, and I had 100 shares. So that means my invested amount was basically $2,100, right? And I didn't pay any premium back for this put since I was assigned on that put. And then what I didn't tell you guys yet is I bought a call on Rocket, which is something I usually don't do, but basically when it had tanked a bunch, I decided that would be a good time to buy a call, and I was talking with some other people, and they were thinking a similar thing, so I decided to do that, and I started that on May 6th, and then I closed it just a month later on June 9th. For a pretty nice profit. So basically I sold a leap call, which is a call that's long in the future, and what that ensures is that the theta decay doesn't affect the position and make it decay just based on time, which when you're buying a call, you don't want theta decay to affect your position at all. So I bought the 1689 call, and I invested $620 into that one, and then I sold it for $890. So that was a pretty nice profit on that there. And then, like I said, I had that $21 call originally that I sold. I just got $20 for that, and then I paid $2 back. And then I also got this $22 call that I sold recently. I received $50 on Friday, and I put $52 to pay back because the current value of that option is still $52. So if I wanted to buy it back right now, it would cost me $52. And then these are just kind of the summary. So I invested $2,100, and then from these options, these various trades I did here, I have $320 of profit, and because the current share price is $20.67, that means the current value of my shares is $2,067, which means my total profit is just a little bit less than the options profit of So that rounds out to $290. And as a percentage of the total amount I invested, that $2,100, that's around almost 14%. So we can also try to make some assumptions, because at some point this $22 call, something's going to happen to that. So I'm not going to pay $52 to buy it back. So if it gets closer to in the money and the cost of that contract goes up, well, I'll just let it get assigned. So if I let it get assigned, then I'm not going to have to pay anything to buy it back, so that'll be zero. And then in that case as well, I would sell my shares at $22 per share, and then that means the current value of the shares would be $2,200. So that would be, I think for me, that would be the ideal scenario with this $22 call, is just to let that expire, and hopefully it'll get assigned. And then with that, I would be at a $475 profit, which is around 22%, and I would be super happy with that. And then also, I just wanted to share the last few weeks of my portfolio. I just keep track at the beginning of every week. I look at the value, and then I also keep track of how much premium I have realized as profit in the past week. So this doesn't include premium I receive. It's just based on premium I receive minus any costs I pay to buy it back. So I don't account for that until I buy that premium back. So in the last few weeks, you can see I had a few weeks here when I was sitting on those rocket shares where I did not really get any premium profit at all. But then when my account started going back up, you know, the week before May 24th, my account went up 1.33%, and then we were below $5,000 at that point. And then more recently, the week after that, it went up about 3.5%, and I realized $196 of profit. That's the week that I had a Palantir put that I was able to, that was basically the profit from my roll. So that's why that was so high. And then the next week I didn't realize any premiums there, but my account was up 7% because of those rocket shares. And then the week after that, the most recent week, my account was up 6.2%, and I received or I profited $288 of premium that week from that rocket leap, and then my calls and stuff like that as well. And then we're also just taking a look in my actual Robinhood account, so you guys know this is all completely, you know, true or whatever I'm saying. So this is my account here, $5,860, which I'm pretty happy with at the moment. And you can see over the 1 month, it looks pretty spectacular, up $1,000 or 22.79%. But if you look a little further out at 3 months, you can see we were doing pretty well. And then we had this huge drop off. We were up around $5,500, almost $5,600, and then we dropped off to down around $4,600, and then now we're back up at $5,800, which is awesome. And then if you look a little bit further out, around here at the beginning of February is when I started with this options account. So you can see from there it went steadily up, and then we had that big drop and then that big climb back up. So that is one of the reasons I'm trying to sell these calls and sort of get out of this rocket position, is I just don't really like how volatile it is. And because I own 100 shares, currently that's around $2,000, which, you know, is a little bit more than 1/3 of my account, and I just don't like that one position controlling such a large portion of my account. So I'm definitely happy with where this has been, and let me know how your guys' options trading has been going. I know a lot of people have been doing pretty well recently. The market has just been kind of going up a little bit, but nothing too crazy up or down. So that's good to see. I also have done videos on this account in the past, so if you have missed them, I'll leave one of them up here for you guys to check out. I appreciate you guys sticking with me to the end of the video, and I hope it was helpful in some way just to see how I handled these big losses, at least losses on paper. So I appreciate you guys for that for sure, and I will see you guys in the next one.